Welcome back, traders. I would like to present the variables I'm looking on the S&P 500. I mentioned last week that I was looking for a potential pending bearish Garley. We went shy of the proper PRZ. However, we're still within the range of the gap that was previously formed from the previous contract. Back tested a few times. Now we're still within the range. My approach will be, if we break this gap, I was preparing for potential W, the Garley, that take us to an M formation for another retest of those previous low that was within the 73 region. There can be argument to be made here on both directions. Why? Because we are forming what appears to be the construction of a diamond pattern, correct? We have the upper boundaries that was previously the megaphone pattern also at the lows from this range, 72, 73 range, that we mentioned that was potentially a support for what? The previous cipher pattern, okay? If you guys were looking our work, we were looking for this rising wedge, the measure move, and then obviously a pending cipher to a shark reactive move. Now we wait for new information. The new information came as a gap. We also have the W formation for the bearish shark, the larger one on the 4-hour time frame. Therefore, as we move levels by levels, the point I'm looking now is this diamond. Are we gonna break higher? If we break higher, there is indeed an argument to be made for what appears to be the early formation of a bearish deep crab pattern, giving the upward traction at the 0.886. However, are we now constructing the C point? Is the C point already established as support? Then we move into the 1.618. So this is where I'm trying to determine minor moves into the last leg of the move for potentially a daily time frame. This can still be the case as long as we move into the M formation. Let's assume that the W will take us to this M formation. If that were to be the case, we have a lower range for execution on the long side. However, if we're building something else on the hourly, I would like to present those datasets. This is the reason why I was looking for a bearish Garley that potentially came here if we adjust the levels, right? This often is the case, but they also present discernible lower highs and discernible lower lows with an adjusted B point. Being permissive, clearly this is indeed the case. Bearish Garley reaction, but support at the gap, heading within the apex where this structure, the diamond pattern, can break once again on either direction. Now, the other information, the major one I'm looking here, is on the monthly. Why the monthly? Because on the monthly, we may be working on a hanging man. Another reason to be cautious here on the macro, where at least a decline of another 10-15% will be completely possible if there is indeed more continuation towards the upside into the 8,000 region, where many analysts are expecting, okay? But you guys know the story. I mentioned also that on the 4-hour time frame, we may have an argument for a Wyckoff distribution. Here on the current contract, on the September contract, we are potentially constructing, if we are indeed at the last point of supply. I would like to share here an image for what may be the case if we're not going any higher than the current highs, okay? That we have the up thrust, okay? Now the Garley may be at the last point of supply. Then if we break below the trend line, also below the previous low at 7,300, we may have the approach from a Wyckoff schematic number 2, okay? If we go into the continuous contract, the ticker ES1, okay, on TradingView, this may be a different case. This may be an up thrust after distribution, a UTAT already printed since prices went higher than the previous high. But again, the continuous contract is not a chart to be traded on. We cannot trade based on these data sets, but rather the main contract. If we go into the XPX on the cash market, we can potentially observe a similar reading as a last point of supply, similar to the current contract. Why? Because we did not breach the previous high. Here, you guys can also may observe the formation of a diamond pattern. Diamond pattern, once again, are often presented at the tops, but we also have seen that these patterns can be neutral, as they can break on either direction, where we have the measured move of the height of the structure to breaking on either direction. If we break upwards, we have obviously new highs, 7,800 to 8,000. If we break below, we then know that we are dealing with an information that later may present as another C point or an information leading to this major W. I'll see you guys into the next one. Obviously, if I see a trade setup where being on small or larger time frames, I will present them equally. I'll see you guys on the next one, and let's get ready for a new trading week. Cheers.